And it's time for another Macro Monday, where I get you ready for the week ahead in 5 minutes or less. As always, this is just a small snippet of our full Macro Monday newsletter. So if you're looking for more in-depth coverage on the week ahead, I highly suggest you check out the link that I put in the description of this video. I think you'll really like the full version of our Monday morning newsletter. First off, happy Thanksgiving to our viewers in the US. And the data starting to normalize a bit. We got some catch-up data. There's still some work to be done on the government side to get all of our data up to date, but we get enough to go off of. So we got a really cool chart this week. We'll be looking at some PMI data this week. Based on what we've learned from the PMI data published during the shutdown and the ISM Services Index in particular, both core and headline PCE seem likely to remain well above the Fed's official target for some time. That's why we'll be keeping a close eye on the ISM Services PMI coming out Wednesday of this week. The services sector has been relatively more resilient in this cycle. While the shutdown may introduce some short-term noise, the component to watch is prices paid. That is one of the most important inflation indicators at this stage of the cycle. And that's what the chart here is. As you can see, October's reading of the blue series of 70 was one of the highest since October of 2022, with 16 out of 18 industries in the survey reporting higher prices. This matters because prices paid tends to lead headline PCE, a core Fed input, by a couple of months. Over the past month, the expected path of monetary policy has been the primary driver of performance trends. This is because of the unusual uncertainty about the path of policy and the extraordinary volatility in the odds of a December 10th rate cut. A month ago, markets had priced in roughly a 90% chance of a cut before year end. 2 weeks ago, that number had plummeted to 22%, but as of last Friday, expectations had surged back to around 90%. So the market is now expecting a cut in December. A key reason behind these swings is the bond market's reaction to comments from Fed officials and the clear lack of consensus inside the FOMC. Hawks point to inflation readings, still roughly 100 basis points above the Fed's target. The doves focus instead on labor demand. Falling job openings and higher unemployment rates suggest restrictive policy. Given the recent tilt toward easing, it's not surprising to see strong recent performance from rate-sensitive growth sectors. This includes technology, communication services, and consumer discretionary. Precious metals such as gold and silver have also rallied as investors have gravitated toward hard assets in the declining real yield environment. We'll be watching this chart this week because any fresh inflationary signals would likely reduce the perceived odds of a rate cut in December and shift market leadership away from growth-sensitive growth stocks, thereby pressuring a very tech-heavy S&P 500. And so, we mentioned on Wednesday we're getting the services PMI. Well, we begin the week with the manufacturing index for November. That is released at 10 a.m. Consensus expects a headline reading of 49. That's basically in line with what we've seen for the past year, as the index has been confined to a tight range between 48 and 51. This signals very weak growth across the cyclical parts of the economy. Also on Wednesday, we have the ADP employment survey for November. Consensus sits around 42,500 job gains, which is roughly in line with October. A print like that would be consistent with the 2025 pattern of soft job growth but low terminations. Typically, the BLS follows 2 days later with the employment situation report that we're all waiting for. But due to the shutdown, the November release has been pushed to December 16th. So we're going to have to wait for the middle of the month for that. We talked about services already, so I'll wrap it up on Friday. That brings one of our favorites, the University of Michigan Consumer Sentiment Index for December. Pessimism remains elevated, with both the current and expectations component hovering near levels consistent with past recessions and inflationary episodes. The data reflects a consumer that's being squeezed by weakening incomes and persistently high prices. That's what I'm going to leave you here today. Jam-packed calendar. We got some really important PMI data. Thanks for watching. Again, I hope you have a great week. Hope you enjoyed your Thanksgiving. Don't forget to subscribe, and I'll see you right back here next week for another Macro Monday.